Hi all, happy evening. After a long time, I am again back in front of the camera, and today I will talk about, the private equity landscape in the region. When I say in the region, means Middle East, India and Southeast Asia. The private equity, what the people and the investors and the asset managers used to think in last decade has considerably changed. It's a resilient growth through strategic transformation. Why resilient growth? It reflects the need to build and back companies that can weather volatility, macroeconomic uncertainty, geopolitical shifts and market condition. And why it is called strategic transformation? Because it has changed from financial engineering to operational excellence. It's about digital enablement, ESG integration and sustainable scaling. Transforming value creation in a disruptive world. That is all about private equity. Beyond capital, beyond enduring business and, generate income and returns for the investors. Driving operational alpha in the AI first economy. So what does it mean? Empowering, tomorrow's leader through smart capital. Now I will wanted to give you the current landscape of private equity. The global AUM as per 2024 Prakin report is $12 trillion plus. Dry powder approximately $2 trillion plus, which is a record high, unbelievable. Valuation pressure is there, but slower. The reason is that slower deal making due to higher interest rate and tighter exits procedures. Growth drivers, if we need to understand, operational value creation, private market expansion, emerging themes, ESG integration, AI transformation, climate tech, health tech, edu tech, N-tech is entertainment technology, right? So there are so many emerging themes are coming up in private equity space, so which is a growth driver to the industry. Return potential, higher net IRR, risk and illiquidity has been curbed and reduced to a larger extent because it is not erstwhile cases that 7 to 10, 12, 15 years private equity. It has reduced to as low as 3 to 5 years, which is a medium range. So the return potential is higher, growth drivers are amazing, and current landscape is very, very positive towards, $13 trillion. So that is amazing. So why private equity stands out among all asset classes? Higher return. If you see the historical return, 12 to 16% return. So, and in public market, it is 8 to 10% historical return. In the bond market, 4 to 6% return. Volatility, lower volatility if we keep the benchmark quarterly in private equity space. If we take, consider public market, then it is a little higher if we keep the benchmark daily. Liquidity is low to medium in private equity. It is higher in other asset classes. In active management is high in private equity and it is passive in other asset classes. Diversification is, strong alpha potential, and that is amazing. And on other asset classes, often, beta exposure. So this is the current landscape of private equity, which is amazing. Any ultra high net worth individual, institutional client, bank and financial institutional treasuries and family offices are gung-ho about, private equity investments across the globe. I would like to bring and put forward about some of the numbers in Middle East, India and Southeast Asia. I will explain in 3 ways: market growth and deal activity, asset managers, opportunities and challenges, and investors' sentiments and return. If we need to understand market growth and deal activity of all the 3 regions which I would like to discuss, that is Southeast Asia, India and Middle East, the 2024 deal value in Southeast Asia was around $16 billion. India was whooping, as per Ben's report, around $43 billion with a 9% growth rate, over 1,600 deals, and Middle East around $19.7 billion. So that's the kind of private equity opportunities and deal values in across 3 regions. If we need to understand 2033, Southeast Asia is expecting a growth of 8.8% CAGR with a $63.1 billion. India hoping $232.7 billion as per Moda Intelligence report, with a growth rate of highest in the world, 18.2 CAGR. And Middle East will end up somewhere around $35.5 to $36 billion with a CAGR of 6.5% growth. So in terms of the market projection may vary in India or Middle East or Southeast Asia a little bit. However, this is very, very clear that India is emerging as a transformational expansion because solid fundamental sustainable growth, significant opportunities in various sectors like digital, financial services, healthcare, real estate, manufacturing, renewable energy, deep tech, entertainment and education. If we need to highlight asset managers' challenges and opportunities in Singapore market, the Southeast Asian market, then deal values are rebounding. Fundraising is getting tougher and tougher, and top private equity houses dominates, and GP focuses largely on fintech, healthcare and infra. If we need to understand and highlight Indian market for the asset managers, then domestic GPs are teaming up for improving operational excellence and expertise to drive the portfolios, and slower, stronger IPO driving more private equity activities. Since it's a domestic consumption driven market, so there is a little bit of leeway for the asset managers and much larger opportunities to play around. And if we need to understand the Middle East market for the asset managers' challenges and opportunities, then fundraising cycle is increasing around 22 months versus the 14 months global average, and there is a clear-cut shift towards evergreen and interval funds, NAV-based structures to offer more liquidity and transparency for the investors in this market. I'll explain on the investor sentiment and return perspective. Singapore investors and clients, the family offices and institutional clients caution about exit hurdles. Return expectations are around 15 to 20% mid-term, that is 5 to 6 years. And the focus is on digital opportunities and infra deals, and those deals are in peak. So investors gauge, macro risk like tariffs, etc. Insofar as Indian investors are concerned, AIF and private equity funds and structures are gaining momentum among ultra high net worth individual and family offices. Indian family offices expands beyond wealth preservation, increases allocation in private equity. Ultra high net worth individual, institutional clients and private offices and family offices are looking for overseas opportunities and platform for their diversification and risk mitigations and return perspective. Middle East clients, SWF and family offices involved very strongly, expects 15 to 20% return in midterm, and LPs are ready to increase allocation but insist on transparency and liquidity. It is very clear that private equity stands out among all asset classes, real estate, commodities, fixed income bonds, and public markets, because superior long-term returns are available in private equity, active value creation, access to high-growth private markets and private companies, resilient to volatile market, diversification and alpha generation, capitalization on mega trends like AI, space, digital transformation, ESG, etc., etc. So there is an humongous opportunity for the institutional investors, family offices, ultra high net worth and professional clients in private equities, and this is the time and which is gaining momentum in various sectors in private equity at this point of time. Thank you very much, and have a lovely evening. See you soon.